All right, guys. Let's go ahead and get started. My name is Gibby. I'll be doing the demonstration today. Just to kind of give you a little bit of experience about my background, I've worked for Thomson Reuters now. It was Reuters when I started, but now it's Thomson Reuters. I've been working there for about 14, 15 years. So it's been a really, really long, good run. It's a great company to work for, and I get the opportunity to travel the world, do demonstrations, show people how to use the software, and do something that I very, very much enjoy. That's enough about me. You don't really care too much. Let's go ahead and get started. I do need to please my lawyer, so I'm going to start by reading a disclaimer. The disclaimer, the demonstration today is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Thomson Reuters shall have no liability for any investment decisions based on the use of the software, trading strategies, or any information provided in connection with the company. I want to get a little bit more specific about that as well. I am not personally a registered investment advisor. Today I'm going to be talking a little bit about how I personally trade. I personally trade a lot of stocks, I trade a lot of mutual funds, and I trade a lot in my 401k. The method that I'm going to be talking to you about today is a method that I particularly use for trading. I find it's very, very versatile in different markets. I want to talk to you a little bit about MetaStock. Like I said, we're not going to spend a lot of time in PowerPoint today. But MetaStock's actually a company that's been in business since 1982. It was founded by Steve Akalis. We were purchased by Reuters. It's now Thomson Reuters, like I said, in 1995. That was about 2 years before I started. A few years ago, we've released a product that's been very, very popular among retail traders. It's called Quote Center. It's a real-time news and data feed. We released that just a few years ago, 2005. It's been a very, very popular item. Because now, for the first time ever, you can get Reuters news and Reuters data directly from Reuters and not have to pay the price of a Bloomberg terminal. And that's done very, very well for us. We're a little bit proud of our accomplishments. We've actually sold about 310,000 copies of MetaStock over the last 20-something years. Today, I'm going to be talking very, very specifically about a very, very small part of MetaStock. We won't be talking much about MetaStock. I'm going to be doing most of my training on a built-in methodology in the software called the RMO. Now, I want to be really, really specific here. There's a lot of methodologies that are in MetaStock. This may or may not be a methodology that feels well to you. I like it because of a few reasons that we're going to cover in the class. There are other methodologies that work very, very well in the software. This is really what I want to say is we're going to be very, very extremely myopic. If you have questions, I'm going to do my best to answer questions that you might have. Type them in there. If I miss your question or I don't answer it, it's probably will be because I missed it. Go ahead and ask that question again, and I'll try and get it the second time around. Okay? In MetaStock, there's a lot of stuff that we're not going to cover today. We're not going to be talking about system testing. We're not going to talk about the Explorer at all, which is our scanning utility. We have a trademark actually on the word expert advisor. We're not really going to be talking a lot about expert advisor, but there is a lot of things that we have an hour to talk. I'm going to talk about something that I think is going to be very, very effective for you. It certainly is effective for me. And I want to give you something that's going to be very, very specific, and it's going to help you in your trades right away. There's a picture of the Reuters building. One of the other things that we're proud of about is the fact that we've been voted #1 software in our price category. It's been 19 years in a row. For our real-time software, it's a little bit of a newer software application. We've only been voted best in our price category by Stocks and Commodities for about 10 years in a row. Okay, now we're going to kind of get into the content a little bit. Really, RMO, when you boil it down, it stands for Rahul Mohinder Oscillator. It's a trend-following strategy. The idea behind RMO is it's going to help you identify the trend of the currencies that you're interested in. It's going to help you trade in the direction of that trend. And it's almost a cliche in the general market. You know, the trend is your friend. trade with the trend. Steve Nason says it best. He says a rising tide will lift all boats. What we want to do with RMO, and the reason I like RMO so much, is it's something that helps us identify and trade in the direction of the general market trend. And so very much the first thing that we're going to do when we start to look at a currency pair today is we're going to identify whether that particular currency pair is trending up or if it's trending down. But again, it's almost a cliche in the marketplace, but we want to trade in the direction of the trend. If a currency pair is getting stronger, we want to trade in the direction of that general trend. Okay? We also have a definition for oscillator here. Oscillator, a lot of you are familiar with RSI, rate of change, MFI, and the meaning and the label of RMO, it stands for Rahul Mohinder Oscillator. It's read a little bit differently than oscillators, and that's the reason I put this slide up here. Oscillators, generally like a stochastic or a MACD, you're going to wait for them to get overbought or oversold. If it's up above 80 or 70, you look for a reversal signal or a reversal pattern. With RMO, you're going to notice that is extremely different than the way you read the RMO indicator. Is very much different than the way you're going to read a lot of the other oscillators you might be used to. And we'll talk about that very, very specifically once we get into the software and we start to identify whether the currency pairs that we're looking at is getting bullish or bearish, and use that to identify the trends that we're following. Want to talk just a little bit about Rahul. For those of you that aren't familiar with MetaStock, we're a fairly large international brand. We have established distributorships probably in about 100 different countries in the world. My personal job is actually to set up dealers. We have one dealer that's actually the best dealer that we've got in the world. His name's Rahul Mohinder. Last year he was the best dealer we had. The year before that he was the second best dealer that we have. The year before that he was the best dealer we had. We work a lot with Rahul. We really like him, obviously, because he helps us sell product. The RMO is actually one of the things that he uses in his own personal trading. The way that we got it is he was in the office. He was talking to us about the way he trades. He showed it to us in the office in Salt Lake City, Utah. We decided that we very, very much like the indicator. We purchased the actual whole system from him, and we include it for free in all of our MetaStock platforms. Rahul, we have a lot of respect for, but he's a panelist on CNBC. He does a lot of training on CNN India, and he actually runs a training company that teach people how to trade over in India. And so that's where this particular methodology comes from, and that's why it's called Rahul Mohinder Oscillator. So let's talk a little bit more about why I like the RMO so much. And like I said, this is an indicator that I use in my trading. It's a system that I use in my trading, and these are the reasons I like it. Very, very easy. It's very, very much rule-based, so it's not subjective at all in terms of where you're going to be buying or why you're going to be buying. It's not subjective at all in terms of why you're going to be selling or how you're going to be selling. Very, very simple system to employ. It uses solid money management. I'm going to teach you how to move your stops, where to put your target, how to go ahead and manage the risk that you're doing trades. It works on a lot of different time frames and a lot of different instruments. Personally, I'll come into a class, and I do this particular class probably about 6 times a month right now. I'll come in and I'll say, hey, if it's an Egyptian group, do you guys want to look at Egyptian stocks? If it's a Saudi Arabian group, I say, do you want to do Saudi Arabia? Do you want to do London? What kind of instruments do you want to look at today? And that's one of the things that's been extremely beneficial. Obviously, the fact that we're owned by Thomson Reuters, we can get data just about anywhere in the world for just about any instrument in the world. But the thing that I notice about this particular system is I can come in, I can look at currency pairs, I can look at stocks, I can look at futures, and with some exceptions, it doesn't work all the time, but usually about 50 to 75%. So if we pull 4 stocks, it works really well on 2 stocks or 3 stocks. Usually about 75% of the time it works very, very well. It works on a lot of different time frames, and it's a very, very easy 3-step process. So before we actually get to the charts, let's kind of talk about the rules. Okay. So remember we talked about the fact that this is a trend-based system or a trend-following system. The first thing that we want to do when we're using the RMO is we want to identify the trend. If we want to trade in the direction of the trend, it helps us to know if we're in the direction of the primary or prevailing trend. And this is where I'm going to kind of get into MetaStock. So I spent a couple minutes talking about the software, the company, that kind of stuff. Let's go ahead and get to the software itself. And I'm going to just change the view so we can see MetaStock. Okay. We had a couple of questions, and like I said, a couple of times I'm going to take a look at the questions and that kind of stuff and make sure I answer all of them. But one of the questions that we had from Harley is, or from Boyke, I don't know, is this also MT4? This is not MT4. MT4 is a company that started up about 10 years ago. It's a competitive company, and it's a great software package. It's a competing software program. It's a good software program as well. The only thing that we really kind of have an objection to is they took a lot of our trademark terms when they started up. They took the term expert advisor, that's actually our trademark. They took the term enhanced system tester, which is actually our trademark. So MetaTrader 4 is actually a different product altogether, but they have a lot of really good ideas, mostly because they borrowed some from us, but it's a good software package. There's no question about it. Harley asked, is MetaStock for spot and spot futures as well? Yes, absolutely, Harley. You can actually do just about anything you want to in the MetaStock software program. Because this is a Forex group, I decided to take a look at Forex instruments. But if you want to look at some futures symbols, we can go ahead and pull those up maybe as an example later on. Okay? So this morning, just getting ready for the presentation I'm going to do, I pulled up the UK pound sterling US dollar. Okay, why did I pull up that one? Well, I've actually got 3 or 4 that I've actually loaded up, and this is just the one of the ones that I saw that I really liked. Okay. What I'm going to do here is we're going to focus on step number 1. Now remember, step number 1 is we're going to identify the trend. Okay. So to do that, I'm going to use this top indicator. It's called the Rahul Mohinder Oscillator. It's the main indicator, the first one that we're going to look at. Okay. And we want to identify whether or not, in this case, the pound sterling is going up or down as compared to the US dollar, if it's getting strong or weak. Okay, because we want to trade in the direction of that trend. This is actually a very, very simple indicator to read. I've put a line on my chart right at about the 0 line. Now, I didn't get it exactly at 0, but I can correct that in MetaStock. So right now I've got a line right at 0. Okay, I'm going to go ahead and make that line a little bit thicker, because I like to see it just a little bit thicker when I'm looking at it. And this indicator, basically what it's going to do is it's going to look at the primary trend, or the long-term trend, or the major trend. Basically, it's looking at a lot of data. So based on the last periods, we're going to say this is either going up and getting stronger, or going down and trending down. Okay? The way that we read this indicator is very, very simple. I'm going to take a look at the last value of the chart right here. Okay? I'm going to take a look at that chart. I'm going to say, hey, is that below 0 or is it above 0? Okay? If it's below 0, I'm going to make, which it is right now, and this is a daily chart for those of you that might be interested, we're going to say that the currency pair is going down. Okay? So as long as it's below 0, we're going to say that we're in a bearish zone. Okay? We're also going to say that it's in a bearish zone because the stock is trending down, or because the currency pair is trending down, or because the futures market is trending down. If the stock is trending down, if the Forex is trending down, what do we want to do with that stock, or that future, or that currency pair? Hartley says, can you show us what candles look like on MetaStock? Yes, I can. We want to look for opportunities to sell. Okay? We don't want to sell just because it goes down below 0, because there's 3 rules that we want to follow. But we want to look for opportunities to sell. If this thing's coming down, and if it's trending down, we want to look to, we know, or at least we've been told many, 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 many times that we need to trade in the direction of that trend. Okay? So if we're looking at the major market trend and it's headed down, and we want to trade in the direction of that trend, we're not going to look for opportunities to buy. We're going to look for opportunities to sell or to go short. Okay? We're not allowed to go long at this point. Okay. Now, if it was above 0, we just reverse the rule. So we would say it's above 0. We'd call that a bullish zone. And we'd be looking for buys at that point. And we wouldn't be going short at under any circumstance. We're going to trade in the direction of that trend. Okay? So it is currently the 11th. This is a real-time chart as it changes. We're going to look at this today and we're going to say, well, this is going short. Okay? So we're going to look for short opportunities, or this is going bearish. Okay? Now I want you guys to notice one thing here. You can look at the indicator if you want. You'll notice that when this goes up or above or down below 0, we also put another indicator on the chart for you. We basically say that it's in a bullish zone, right on the bottom of that chart, or we say it's in a bearish zone. Okay? It's that simple. Now, just looking at this particular instrument, if we knew nothing else, in other words, we only are looking at rule number 1, if we knew nothing else except for we're in a bullish zone, and when the stock is trending up, or the future is trending up, we would have been bullish since about 156. We would have finally went bearish at about 162. During this whole rise up, which is about, well, it's about 6 points, not pips. But during the 6-point rise up, we're only looking to go long. Is that going to be something that's already going to be helpful for us? You bet. Here where we go down short from 162, it's only been about maybe a week or two right now. It's went down from 162 to 159. That's a loss of about 3 points, so we're only looking at short positions during that whole time frame. Okay? So that is how we look at the long-term trend. That's how we analyze the long-term trend. And that's step number 1. Very, very simple little step. Do I have any questions about that? Other than, can you show us what a candlestick looks like? Let's go ahead and I'll show you how to do that. It's relatively simple in MetaStock. It's not that big of a deal at all. Anytime you want to change anything in the software, whether it's an indicator that's plotted on the line or something else, all you have to do is just double click on it. So to make this into a candlestick, what I would do is I'd just find that particular, or I just point at the bars that I want to change. I'd go ahead and that'll pull me into the chart style. And then I have a drop-down list here. There's about 9 or 10 different charting styles you can use. Candlesticks is one of them. Candle volume is one of them. Line, point and figure, Renko, 3-line break. Let's do candlesticks. I'll apply that to the chart. I'll click on close. And one thing that I want to kind of point out real quick too, because I feel like we do candlesticks a little bit more appropriately than a lot of charting software packages. But you'll notice that we have empty or hollow candles when the stock is going up instead of just color coding them. And when it's full, or when the instrument goes down, we actually fill them in. Not only does that kind of give us a little bit more accurate representation of candles the way that they're supposed to look, it also means I can continue to still see my color highlights on the chart that are being drawn on by our expert advisor. So it's just a little bit of a nice thing about MetaStock. We actually technically draw those candlesticks as either shaded or hollowed. And that means we don't have to color code them, which means we can color code them for something else. Harley says it's a histogram. Yes, it is. Okay, let's go ahead. Let me go back into rule number 2 real quick. So we're going to switch back into the PowerPoint really quickly here. And your camera will switch off. I think that's the best way to change between 2 applications with HotCom. Okay, so this is basically, I've got a lot of examples here, but we'll just go ahead and go through it real quick. And we're going to go to, we're going to basically go to the summary of the rules here. Step 1, we're going to identify that primary trend. Very, very easy to do. If it's going up, we want to buy. If it's going up, we don't want to short. It's that simple. Again, it's not a trigger to get in. It's not a trigger to go ahead and buy the stock. We don't want to buy just because it goes above 0 or below 0. We want to wait for the other rules to match up. Okay? So then we go to step number 2 in our 3-step process. And before we were looking at the primary trend, now what we're going to do is we're going to look at the short-term trend. Okay. Now, we want to do this a little bit more specifically, and I've got some examples here. But we want the primary trend to match up with the short-term trend. Okay. In other words, if we're looking to do a short position, we'd want it to be going up short-term, or if we're going to do a short position, we're going to want it to be bearish both short-term and long-term. Okay. So in that case, we'd be allowed to short. We wouldn't still not be allowed to buy, but we want them to match up. If they don't match, what we're going to do is we're going to wait until we're going to wait a few bars. If we're looking at daily charts, we'd be looking at a few days. We'd be looking at a few hours if we're looking at hourly chart. And you can apply this to any increment of time that you want. But what we want them to do is we want to make sure that they match up. Okay. Let me show you how we do step number 2. It's very, very simple. It's the same way we did step number 1, but we're just looking at a shorter time frame for that trend. So you should be able to look at my MetaStock chart again. I've got it drawn on the chart. And what we're going to do is, before we looked at this Rahul Mohinder oscillator, now we're going to look at the indicator called swing trade number 2 on here. And this is our shorter term time frame indicator. Okay. For the purpose of this thing, I'm going to actually change my blue chart to a line. That way we can see more the light pink indicator, the light purple indicator that we want to look at. Okay. So ignore the blue line for now. We'll come back to that in step number 3. In step number 2, what we want to do is we want to identify what that long-term or what that short-term trend is. My apologies. On the chart, and we're going to read it exactly the same way. Okay. In fact, I'm going to put a 0 line here on the chart. I'm going to double click on it real quick so I can make sure it's exactly at 0. I'm going to come back and I'm going to just make it a little thicker right now. I'll apply that to the chart. Click on close. And just these other lines off that we drew on there initially. Okay. Now, so the indicator that we're looking at is this purple indicator. We're going to read it exactly the same way we read our long-term oscillator. So what I'm going to do is I'm going to cheat real quick. I'm just going to paste the rules in here. We want this to also be above 0. Okay? We're going to say that that's in a short-term bullish zone. We'll still look for buys if both of them are above 0. And we still want to do a short. Both have to match. Okay? That looks a little cleaner that way. Same on the short side. Okay? I'm just going to copy this real quick. Go back to my thing. And this is really, really easy to use. I mean, it's pretty simple. And that's the thing that I like about it. I don't like to spend a lot of time doing a lot of analysis on the market. I was talking to a guy yesterday, and he's like, well, I always seem to buy at the wrong time, and then I kind of question my judgment in terms of whether or not I should go ahead and sell. The thing about this is when we get in our trade, we'll know exactly why we're getting in. But more importantly, we're going to know what our losses are going to be. And we're not going to be looking at the macroeconomics of China. It's very, very simple. It's just basically going to keep us, if this currency pair starts to trend in a direction, we're going to go ahead and buy in the direction of that trend. We're going to put in a stop loss. And we don't have to overthink it. Okay, so let me go ahead. We also want both of these to match. Okay. Does it work every time? It doesn't. But it works enough that it's going to be beneficial for you to use. Okay. So again, let's go back to the very, very last bar of the chart because we have to trade off of the last bar of the chart. We're going to say short-term is this bearish, short-term is this bullish. The answer is very, very easy. This is bearish short-term as well as long-term. Okay? So now we know that they're both below 0. We know that we can look at opportunities to go short right now. So again, we haven't had our trigger yet. We haven't got anything that's going to tell us when to go long or go short. But we know that we're only going to take those positions that are short on this particular bar on this particular day. Does that make sense to everybody? Is there questions so far? Okay, no questions so far. Let me go ahead and we'll switch back to the PowerPoint real quick. Oh, the blue line, Boyke? We are going to talk about the blue line in step number 3. So we're just about there. Okay, so just to summarize the rules, again, this is very, very simple. We want the primary trend to be bullish and the short-term trend to be bullish. And when that happens, we're going to look to go long. Okay, we're still not getting into this particular instrument, in this case, this foreign currency pair. We're still not allowed to short, and it's still not a trigger to get in or out. Okay? If they don't match, and this is important, if they don't match, if the primary trend and the short-term trend do not match, you're allowed to either wait for new opportunities to come up, or you're allowed to use, we have a scanning utility in MetaStock, which makes it very, very easy to scan the different currency pairs that you're interested in or the different futures markets that you're interested in to find opportunities, not just on RMO, although it does include RMO, but a lot of different methodologies as well. So it's a great prospecting tool. It'll save you a lot of time and money, but it allows you to kind of identify trading opportunities when you don't have it. Okay, so we can wait, or we can use the scanning tool to find an opportunity that might be more happening right now. Now we're going to talk about step 3, and step 3 is probably the most involved step. This is where we're going to identify the trigger. We're going to place our trades. We're going to put in our stop losses. So pay attention. This is actually kind of where we're going to cover a lot of meat and a lot of ground when it comes to trading the RMO or the RMO methodology. Okay, so let's go ahead and do this one. We're going to structure our trade. We're going to manage stops, and we're going to wait for an exit signal or a stop to get out. Okay, so, and this is, let me go ahead and switch back into my MetaStock application. And while I do that, I have a couple questions that are coming in that I'm going to help answer as well. Okay. This. Okay, you guys should see MetaStock as well. Now, the questions that we have are from Fernando and Must, and I appreciate the questions a lot. How is this indicator calculated, and how is the RMO based? And with this particular indicator, the rules that we've got for licensing it when we purchased it from Rahul is that he wanted to keep the indicator a secret, so it's a black box. So in other words, I don't even know how it's calculated. I have some good ideas, but I can't tell you even if I did know. If you don't like that, most of the systems in MetaStock, and this is just one of them, are actually open. So you can't see the logic. It does explain the rules. There's a commentary that explains to you what it's looking at, and there's a lot of systems that you can use. With this particular one, the methodologies and the coding that he's using is proprietary, and we're not allowed to share what the logic is. It's a secret. So you may or may not like that. If you don't, well, I hope you still like RMO, but there's a lot of other systems in MetaStock you can use. This is one of them. Okay, and the program comes with many of them. I just particularly like this one. It's the one that I trade. It's the one I like to show people how to use, and I think it's one that's very, very, very effective for me and my style of trading. Okay, the blue line. We're going to get to the blue line now because remember we're looking for a trading opportunity. So in this particular case, we've looked at the primary indicator or the primary trend. We've determined that it's bearish. We've looked at the the short-term trend. We've indicated that that's bearish. So to get our triggers, we're going to look at the intermediate trend. Okay. Now with this one, we're going to read it a bit differently than the way that we read the other indicators that are on the chart. In other words, we don't care if it's above 0 or below 0. We want to look at the intermediate trend and its relationship to the primary trend to identify where we would specifically get in or out of a particular currency pair. Okay, let me talk a little bit more specifically about this. The blue line would be your intermediate trend. The pink line would be or the light purple. I'm not sure what the color for that is, although maybe I should look it up with the amount of talking I do about this particular system. But the pink line would be the short-term trend. Okay. Now, the medium trend can be below zero. It can be above zero. We don't care about zero in the particular case. But what we want to look is we want to look at the relationship between the intermediate trend and the short-term trend. Okay. Right here, and I'm just going to zoom real close in, right here, and I'm going to put a horizontal line right here. Okay. Right here, our short-term trend, indicated by a pink line, got more bearish than our intermediate-term trend. Okay? We would call that an actual signal to go ahead and trigger into a security as long as the trends are on our side. So in other words, what we're saying is when the short term starts to get weaker than the intermediate term, Rahul has a very, very specific name for that. He calls it a change of strength or a change of momentum. And this is a particular opportunity where as long as our long term and our short term match up, we're going to go ahead and take a signal on the chart. In fact, I drew this vertical line right on the chart. If I actually minimize this wind indicator, you'll notice that MetaStock plots a sell signal there for us. Okay? And people get confused about that sell signal because they think that they should go ahead and sell at this particular point. I'm going to tell you that you're not supposed to at this point. Why? Because if we look at step number 1, we're going to say that we're bullish long term. If we look at step number 2, we're going to say that we're bullish short term. And if the stock is bullish and we think it's going to go up, or the future or the forex pair is bullish and we think that it's going to go up, does it make any sense for us to take a short position at this time? Not at all. Okay. So in this particular case, because of rule number 1 and 2, even though we're getting a sell signal plainly put on our chart, we're going to go ahead and wait because we don't want to trade in a direction that's going to be opposite of the trend. This is a daily chart. You do the exact same thing on an hourly chart or a 30-minute chart, even a 15-minute chart. But what we want to do is we want to take these buy signals and these sell signals, but we only want to trade them if they actually match with the trend that we're following. So right now we're getting a signal that says go short. We're not in a position, but we know or we think that the stock is trending up still, or the future or the currency pair is trending up. So we do not want to trade against that particular trend. And until the currency pair proves that it's going to start to move down, we're going to totally ignore this particular signal. Okay? So we ignore it for a day. Because we have a daily bar. It starts to go down a little bit. We ignore it for another day. And it goes back up a little bit, but we're still bullish long term and we're bearish short term, but we don't have a permission yet to sell this particular currency pair. So we wait for another day, and another day, and another day. Okay? So you'll notice that we've got 1, 2, 3, 4, 5 bars. Okay? And on the daily chart, that's a week, almost, except for Saturday. It's almost a week on a currency pair. But we've waited until the situation lines up until we can get the position that we want. Okay? Now, if it would have started to go back up, we probably would have gotten a buy signal because the short term would have gotten a little bit stronger. But in this particular case, the currency pair is continuing to degrade, and we're starting to get sell signals on this particular chart. Okay? So the line that I've got on this chart, this is the day that I'm going to decide to go short on. What instrument are we looking at? We're looking at UK pound sterling US dollar. Okay? Now I want to do two very, very specific things. We've identified that we think the stock is going to go down. We've identified that it's long-term bearish and short-term bearish, and we've waited for all of that to line up because we want to head into town at the right time. Now we want to identify very, very specifically how much money we're willing to risk on this trade and at what point we're going to actually trigger into that trade. Okay? Now I'm going to be very, very specific with the way Rahul teaches to use this methodology. Okay? Right here you see this is the day, again, that we're going to look at on the chart. I'm going to take my vertical line tool, or I'm sorry, I should say my horizontal line tool. That would be a little bit more accurate. And remember, all of this data doesn't exist yet. So we're just looking at this day. This is the actionable day where we can short a stock. And what I'm going to do is I'm going to take and I'm going to draw a horizontal line just a little bit below that price activity. Okay. So I've taken, I know I want to go short. What I've said is I just want it to go down just a little bit more and verify that it's going to kind of break through the price level that it's been. If it goes down below that, I'm going to go ahead and get into a short position. Okay, so we call that that basically is going to be the trigger in which we go in. Okay, we want to do that too for the high. So I would look at the high of this price bar. I would look at the high of the bar before. I'm going to put my my horizontal line right above that price activity. And I'm going to use this particular line. What do you think I'm going to use this line for? And I'm going to, okay, so I'm going to let you guys answer that question. I'm going to answer a few questions. Again, the line is, okay, so we've established that this is our limit order line right here. Limit, this will be the price. If it goes down below this, we're going to short, but we're not going to short until it goes down below, and in this case, it is 161,492. Okay. Now, what do you think I'm going to use this particular line for up above? I'll help you out a little bit, and then I'll answer my own question. Okay, if we know we want to short at 161,492, we know what we do want to know is we want to have an exit strategy in case this goes back up against us, because sometimes it will. Nothing's perfect in the market in the realm of trading. What we want to do is we want to have a limit or a limit on our loss. So what I'm going to use this top line for is I put it right above the price activity for those last 2 days. I'm going to use that as a stop point. In other words, if I get short on this particular stock and it comes back and it pierces that upper level, I'm going to go ahead and instantly cut my losses and look for the next opportunity to either go short or long. Okay, and it's very important that we do that when we trade because we want to limit our losses. Money management is a very, very important role for those of you that have been trading for some time. You'll agree with this. So what I want to do is I want to put in a stop loss, and in this particular case, I've put it at 163,912. So I'm just going to write that level on the chart, 163,912. Okay? So if I go short, I'm going to go ahead and go short as close to 161,492 as I can. I'm going to exit that position at 163,912 if it goes against me. What do I now know? I know my risk. I know exactly what, or as close as you can without trading, because as you know, and Forex isn't as gappy, but if you gap up above that level, you're going to take more of a loss. If you can't get in as close to your entry point as you wanted to, you're going to pay less for that position. So as close as we can measure what our risk is going to be before we enter the trade. And that's something that gives me a very, very big degree of comfort when I'm doing a trade. I'm a conservative trader. I'll be very, very specific about this. That's one of the reasons I like this so well is you always have your stop in place. You always know exactly where you're going to get short. And this is something that you can kind of set and forget. Talking to a guy just yesterday, he's like, well, I already told you this story. I won't say it again, but he was using MetaStock, and he was just kind of he was saying that he wanted something that was a little bit more specific in terms of when he got in and when he got out, in terms of laying out where he should put his risks and his rewards. And so I sent him the RMO video last night and told him this is what I use. You may or may not like it. I've been using it for some time now. I recommend you look at it. So I'm going to follow up with him today and see exactly how that's working out for him. But it is something that is going to be tremendously beneficial to be able to have your stops and you'll know exactly where they're going to be when you get into a position and know why you're getting into a position. Let me clear my throat a second. Had a couple questions come in. We're going to go ahead and see this trade all the way through, but we'll probably go back in time and actually look at some more examples because, well, I can't show you future data because I don't have it. We can go look and I can show you how to move that stop and look in those profits. what is the magenta oscillator? Okay, the light pink, I guess I will start calling that magenta. That's the short-term trend. So basically, the green one is the long-term trend. The magenta one, which I believe means light pink, is the short-term trend. Okay? Let's see. We had another question. Can you search a trigger so we can see it in practice? So in other words, can we run a little bit of a scan? Yeah, I think we can do that. I'm going to do it after we go through the whole rules, and we'll evaluate how much time we've got. But as long as time permitting, I'll show you how to run a little scan using MetaStock. Can you have one chart with multiple time frames saved on it, Harley? Absolutely, you can. In fact, one of the systems, and I won't be talking about this today, but remember there's a lot of systems in MetaStock. I like to kind of give you some ideas of some things that will help you make money as soon as you open the software box. But in fact, one of the systems that is included is called FX Multiple Time Frame. It'll be pound FX. It'll be at the very top of your list. You should take a look at that one. There's also one called FX Pattern System, FX Keltner System. Those are the FX ones that I really, really like. So for you FX traders, this is really just one method. We've probably got a total of like maybe 40 that are built into the software. And you can actually create your own. You can actually import your own. And there's a lot of MetaStock systems that are out there because we're probably one of the most established companies out there in the market. We've just been doing it for so long and making our software better for so long. So, okay, let's kind of move on. So very quickly, just because this is the most recent chart example, you'll notice that we're in a profitable trade right now. We haven't done anything yet because nothing's happened to give us a signal to do anything yet. But right now we're making money. We're happy about that. We've been holding this. This particular instrument's continuing to deteriorate. We haven't moved our stop yet because we haven't had a signal to. And I'm going to go back in time so we can kind of talk about how you manage a position through an upward trend. Okay, so let's go ahead and do that. I'm going to go ahead and delete some of the notes I've made on the chart and the line levels and that kind of stuff. And let's go through a historical trade example with historical data, simply so you can get an idea of better how you would run this in a real-time scenario or a real-time setting. So I'm just going to zoom right out here. Now, again, this doesn't work all of the time. It isn't perfect, and it never gets you in exactly the top and bottom. Bulls make money, bears make money, pigs get slaughtered. Robert Thiel. This does a pretty good job of keeping you in the right direction. Okay. So we'll start here. I think this might turn out to be an unprofitable trade for us. We'll find out. Right here, let's say that we'll use our way back machine here, and we'll say that the current, when we started looking at pound sterling, it was December 15th of 2010. This way we can go through a couple of trade examples in terms of how this would work for you. Okay, so on this particular signal, we got a bearish reading short term. Our bullish reading is still showing a long-term trade, okay? And so we're not going to do anything there. We're not going to do anything there because we're still bullish long-term. It's not till 2 days after that we actually get serious about going short on this particular instrument, okay? So at this particular point, I'm going to go ahead and put in a level right below my price activity for those 2 days. Here's the day I'm looking at. Here's the day I'm looking at. The day I'm going short in the day before, basically. I'll say if it goes, I'm going to move it just a little bit closer. If it goes down below that price point, I'm going to go ahead and take a short in the market. Okay? And I'm going to do the same, but I'm going to do it with a protective stop. Okay? So I'm going to say if it goes up above this price point, after I've gotten in at this price point, then I'm going to go ahead and take a loss, or going to go ahead and get out and protect my remaining capital. So at this point, we're talking about an entry price at 155,317, and we're talking about a stop at 156,484. So it's a fairly tight stop. The next day, we go short. The next day, it goes down. The next day, it goes down. It starts to go sideways, as a lot of times when it bottoms, it does. And wouldn't you know it, here we get a signal to go long. Okay. Now, more often than not, this will happen, and you'll want to go ahead and stay short, because in this particular instance, we're still showing a weak long term. We're still showing a weak short term. So at this particular junction, even though that it was the wrong move in retrospect, we're going to hold on to this particular instrument. Okay? The next day, the day after, what happens, I think, and let me just move this line so I can see, I think we actually come up and we trigger that, actually would have triggered that stop loss right. So we're out of the trade right here. Okay? Was it a winning trade for us? No. Did we lose a little bit of money? We did. Is that going to happen? Yeah, you bet. Nothing works 100% of the time, and I'd be lying if I said it did. So in this particular case, we're out of the stock or UK pound sterling right here. Okay. Our latest reading is a buy signal. We're looking to go short, though, so we ignore that for one day. We ignore it for another day. We ignore it for quite a few days, and right here is actually when we're going to get, no, next day. Right here is when we're going to get the reading that in this particular instance, UK pound sterling is probably going to start to go bullish because we have our long-term bullish reading and our short-term bullish reading. Doesn't always do it, but in this particular case, we're going to go ahead and take our trading position. Okay, so right here is the day I'm going to buy. What I'm going to do is I'm going to move that over one. Okay, there wasn't a high above that. So I'm going to go ahead and put my two levels on the chart. This is going to be the level at which I'm going to buy. Okay, look at the bar and the bar before. I establish where I want to limit my losses, which is right below that price activity. Here I trigger into, whoa, here I trigger into the chart the very next day. I think somebody private messaged me and I just about jumped out of my seat. Oh, I got a little bit of a warning that I'm running out of time. Okay, and I appreciate that. I appreciate the bit of a wake-up call as well. Oh my gosh, I just about jumped. So right here, dang, I wanted to show a couple more chart examples, but it's more important that you understand kind of how this thing works. Right here is where we trigger into that particular trade. Okay, here we, and we're just going to go a little bit quicker because I'm running out of time. Here we get our signal to go short. Okay. However, I look and we're still long-term bullish. We're still short-term bullish, so I ignore that particular signal like we did in the previous example. We wait a few more bars, in this case a few more days. Here we get another signal to go long. And this is what I wanted to talk to you very specifically about. This particular thing when we're not going to buy more. Rahul is very specific about not buying more. What he wants you to do at this particular stage, when you're in a buy position and you get a signal in the same direction of that buy position, he doesn't want you to buy more shares. He wants you to move up your protective stop. Okay, so now in this case, what I'm going to do is I'm just going to take this loss, stop loss, I'm going to move it right to below the price activity. I'm going to say if it goes down below this price point right here, we're going to go ahead and stop out. Okay, so now I'm protecting profits at this point. Here I get a sell signal that I ignore. Here I get a buy signal where I move up my protective stop. Okay, here we go ahead and trigger out of that signal. Okay, you see that I hit my protective stop right here. So I'm going to go ahead and get out of this particular currency pair. Was that a pretty big move to the long side for a currency pair? I would say that it is. Did it make up for our loss that we had on that first trade example? I would say that it does. Now we're kind of in a neutral position. We're waiting for another signal to go ahead and repeat the process. Since I'm running out of time, I'm going to go ahead and just kind of talk. I think that covers the majority of the rules that I wanted to cover. What I want to do is I want anybody that's going to actually be taking advantage of the offer that we've got tonight, I want them to have the tools that they need to be successful. And I would be the first person to agree that actually the person that created this particular methodology is probably the best one to teach how to use it. And so if you like RMO, good. What I'd recommend, and it looks like I may have a problem with Firefox and the internet right now. We'll see if this web page comes up, but on our web page, if you click on support, okay, here it comes. If you click on support, and you click on online training, it's going to have a couple of videos that show you just how to use the RMO. I would recommend you go through that. You'll also notice that we've got videos that show you how to do scanning we didn't get to scanning, but I don't have time. We'll also have videos that help you talk about how to use a system tester, the Explorer. There's all kinds of free videos that are up there, taking a minute to load. That's not uncommon when I'm broadcasting audio. What is a little bit uncommon is I'm running out of time, and I want to just talk about a few other things here. Oh, sure, you bet. It's www.metastock.com/customer is where you would go to find those particular stocks. Okay. Now let me just go through this again real quick. We talked about this. We talked about stop placement, moving our stop. Again, these are the reasons that I like RMO. For me, it's easy. I have a lot of things to concentrate on aside from whether I'm in the market or not. I've got a full-time job. I've got 3 kids. I want something that's easy, totally subjective and rule-based, use a solid money management. I only trade daily, but it works on a lot of different time frames. We've done a lot of looking at different charts, on intraday charts, 30, 60 minutes, what have you. If you want to use it on a different time chain and a different instrument, play with it. See how well it works on paper for you before you start to commit your own money. And it's a simple process. This is one of the things that I like. I can look at my positions once a day and see if I need to make any changes. If I stop out, then I stop out. But it's very, very simple. It allows me to stay focused on the other things that are important in my life. Okay. Again, I need to actually update this slide, but we've actually been rated #1 in our price category 19 years in a row. Our MetaStock Pro version has been rated best in its price category for about 9 years in a row. Here's a person that I work with. I do a lot of work with the partners we have at MetaStock. Has a pretty good testimonial on RMO. I wanted to make sure I included it for you. He did a manual back test of the RMO on all of the Dow stocks, 400% performance for 2009 when he did it. There's his website if you want to take a look at it. Here's I just included a lot of testimonials today. It's the first time I've ever done this. But this is on broad markets. It's Dr. Cooper, one of our partners, that talks about how he likes to use MetaStock to look at broad markets and individual markets, and that he'd be severely handicapped without trading. Here's one on technical support, which I think we offer for a software company. I was talking to one of the guys at the office a couple of days ago. For a software company to offer the level of support that we do, absolutely free of charge, and the links that those guys go to if you have problems is just incredible. I heard a saying one time, don't train people how to be friendly, hire friendly people. We certainly have a great support staff, and I get comments from my customers and partners all the time on it. Dr. Ed Schreiber, one of the most intelligent pieces of software I have ever used. Oliver Velez, if you know this guy. I was completely blown away. Someone from the beginning level of technical analysis can find tremendous value in the software. And the professional that is very well versed, it's a program that even today I'm still growing into, and I find myself learning more and more with each year. It's one of the things I love about MetaStock. It is such a powerful application. If you buy it and you increase in your trading skills, it's not a program that you outgrow. And that's truly unique for this software in this particular market. So many things just focus on one methodology like RMO. There's tons of methodologies, there's tons of indicators, there's really a lot to be had in this program. And that's why we're rated #1 so many years in a row. I'm going to do something very, very special for you today. I'm going to throw the book at you. I'm going to basically give you one of the best deals that I can give you. We call it our Trader's Action Package. And it does require that you purchase the software. If you buy the software, we give you a money-back guarantee on it. So you can try it for 30 days. If it helps you make money, then it was a pretty low-risk investment for you. Wouldn't you agree? Our end-of-day version of the program was rated #1 for 19 years in a row. It's normally $499, and as an FX Street customer, you'll get it for $449. MetaStock Pro FX is $1,095. You get $100 off on that. You get it for $995. A MetaStock Pro is normally $13.95. It's $11.95. I promise. In addition to that, I want you to truly be able to look at this package at a very low risk to you. So we give you a money-back guarantee. I'm also going to give you Reuters data for free while you evaluate it. If it's something that helps you make money, these are very low data costs. The data that we offer is actually very, very similar in nature to the institutional data that Reuters does. So, but you don't pay $500 a month, $3,000 a month for it, because we've got a retail package put together for you. You can't buy it if you're an institution, by the way. You have to be a retail trader. It includes all of the news. It includes a lot of fundamentals. For those of you that are doing currencies, which I think most of you are, it includes all kinds of information and calendars and earnings and non-farm payrolls, everything that you're going to really need in one pretty convenient package. I'm going to give that to you for free. I want you to understand how to use MetaStock, because if you understand how to use MetaStock and it helps you make money, you're going to continue to not only you're going to continue past your money back guarantee, you're also going to use the software to get better signals and that kind of stuff. And you'll continue to be our customers for a very, very long time. A lot of our customers have been with us more than 15 years. So in that thing, I'm going to give you this $100 training disc. It's going to show you everything you need to know about how to run MetaStock. It's a great primer to kind of get you off to the right step. And it's totally free of charge. If you decide that you don't like MetaStock and you don't want to keep it, you're welcome to keep this. Okay. I'm also going to throw in one of my favorite books. This is a book that stays on my trading desk all the time. In my office at work, I've got a copy. In my office in Boulder Creek, California, I have a copy, but it's called Technical Analysis from A to Z. The reason I like this is it's an encyclopedia of technical terms. So if you have a question about how RSI is calculated, you just pull that open. It's a $40 book, and it just explains to you RSI. A very simple, very easy to read book, and it's $40, and you're welcome to keep that even if you decide, for whatever reason, you don't like MetaStock, and it's not going to help you make better trades. I'm also going to throw in a free month of training from a company called LearnMetaStock.com. They do webinars about twice a week, and it says twice a month. I meant to say twice a week. They usually charge about $100 a month. I'm going to give you a free month of their service as well to help you get started. Okay. So to recap, here's an example of what I'm offering you. I'm going to give you a $100 discount if you buy MetaStock Pro or MetaStock FX. I'm going to give you Unleash the Power of MetaStock. I'm going to give you technical analysis from A to Z free. I'm going to give you a free month of data. I'm going to give you a free month of training. I'm going to give you a money-back guarantee. So your risk versus reward is going to be very, very good here. Your total investment is going to be $12.95. In that, you're going to give out $473 worth of freebies and a money-back guarantee. If you don't like it, if it doesn't help you make money, then it's not worth you buying. Go ahead and return it. This is the example, the same example, but with MetaStock end of day instead of MetaStock Pro. Basically, with that one, your total investment is only $449. How many trades do you need to do a little bit better to make up $449? Not many. Total savings is about $312. Again, you have a money-back guarantee on it. Let's wrap this up. Here's a website to visit if you want to take advantage of that special offer. It's fxstreet.com/services/forex software/MetaStock. Now, I understand that a lot of you might have questions like how do I change my bars to Candlesticks, or can the software do this? And, you know, we're running out of time, so if you have questions, call our sales guys. Their phone number is right there, 801-270-3162. My email is right here on the screen. If you have questions, you can email me directly. It's jeffrey.gibby@reuters.com. I look forward to hearing from all of you. I'm just going to see, number one, how much time we've got left, minus 3 minutes. So I'm going to go ahead and not answer any more questions simply because I want to respect somebody if they're after me. If you do have questions, drop me an email message. I'll be happy to kind of take advantage of helping you out and helping you determine if this is something that's going to work well for you. Thank you for coming tonight. I appreciate your time, and I'm going to wrap up right now.